The real reasons. Prices are so high. Prices for everything from food to rent have been rising fast in recent years, and not just because of supply chain issues or global conflicts. While those play a role, they aren't the whole story. The real causes run deeper and are rooted in long-standing economic policies, corporate behavior, and structural issues that have been building for decades. First, corporate price gouging and profit seeking. One of the most overlooked reasons for high prices is the aggressive pursuit of profits by large corporations. After the pandemic, many companies raised prices far beyond what was needed to cover their increased costs. According to several recent studies, corporate profits have hit record highs during the same period that consumers have struggled. This suggests that some companies are using inflation as cover to boost their margins, charging more simply because they can. Second, decades of wage stagnation and wealth concentration. While prices have gone up, wages for most workers have not kept pace. This isn't new, it's been happening for decades. Productivity has increased, but the benefits have largely gone to the top. As a result, people feel the impact of rising prices more sharply because their incomes haven't grown to match. Third, over-reliance on global supply chains. Global supply chains are efficient but fragile. Many industries depend on cheap labor and production in other countries, which saves money in normal times but leads to major disruptions when things go wrong. When the pandemic hit, the fragility of this system became obvious, and prices rose sharply as companies struggled to source goods and materials. Fourth, financialization of essential services. Basic needs like housing, healthcare, and education have become investment vehicles. Hedge funds and large investors have bought up housing, raised rents, and treated homes as assets instead of necessities. Similarly, hospitals and universities have become profit-driven, with costs rising accordingly. These aren't typical market forces. They're the result of policy decisions that prioritize investment returns over public well-being. Fifth, central bank policies and cheap money. For years, central banks kept interest rates near zero, pumping cheap money into the financial system. This fueled asset bubbles, stock buybacks, and speculation instead of productive investment. When inflation began to rise, the same central banks hiked rates quickly, which raised borrowing costs and slowed parts of the economy, hurting consumers even more without addressing the root causes. In short, high prices aren't just about recent crises. They reflect deeper systemic issues, including unchecked corporate power, skewed economic policies, and structural inequality. Until these are addressed, consumers will continue to bear the brunt. My sources are from the following articles. First, corporate profit-seeking and price markup source from inequality.org, The Guardian and Groundwork Collaborative second. Wage stagnation amid rising productivity sourced from Equitable Growth and Economic Policy Institute third. Fragile global supply chains sourced from thebusiness.rutgers.edu fourth. Financialization of essential services sourced from the PubMed Central fifth. Central bank policies and asset bubbles sourced from Science Direct. Conclusion: while immediate factors like pandemics and geopolitical tensions have influenced price levels, underlying systemic issues such as corporate profit strategies, wage stagnation, supply chain vulnerabilities, financialization of essential services, and certain monetary policies play a more substantial role in the sustained increase in prices. Addressing these root causes is crucial for achieving long-term economic stability and affordability. Please know this is my personal opinion from the research I have done on this subject. Feel free to add your own in the comment below and subscribe if you liked and want to hear more opinions of mine.